Hello, in this video, we're focusing on the practical concepts that you can actually apply in the real business world. Hope you enjoy it. Let's get on with it. Today, we're going to look at why Valero stands out and outperforms other major oil companies. Valero's strength lies in its efficient operations, strategic asset management, and strong focus on refining and marketing, which allows it to adapt well to market changes and maintain solid profitability. We'll explore the factors behind its success, including its nimble business model and commitment to innovation, which sets it apart in a competitive industry. Let's start by understanding these key elements and how they contribute to Valero's performance. The oil and gas industry is often associated with massive companies that own assets worldwide and wield significant political power. However, Valero Energy Corporation has taken a different approach that sets it apart from these large integrated giants. Instead of focusing on expanding scale, reserves, or geopolitical reach, Valero has concentrated on excelling in operational efficiency, maintaining strict capital discipline, and specializing in downstream operations like refining and marketing. This strategy has allowed Valero to consistently generate higher returns on capital, stronger cash flows, and more value for shareholders over multiple market cycles, proving that a focused, disciplined business model can outperform even the biggest players in the sector. Valero's success comes from having clear goals and sticking to a focused strategy. Unlike many others in this industry who get weighed down by complexity and high costs, Valero keeps things simple and concentrates on what it does best. This disciplined approach, combined with strong execution and a financial model designed to perform under tough conditions, allows Valero to thrive even when others face challenges. This is a deliberate and steady formula, not luck, showing that in an industry known for its vast scale and complexity, simplicity and focus still deliver strong results. Valero's primary objective is to focus on maximizing returns rather than expanding its empire. It consistently puts return on invested capital first, meaning it only invests where the potential for strong risk-adjusted returns exists. Unlike integrated oil majors that chase reserve growth or acreage expansion, Valero prioritizes efficiency and profitability. Additionally, the company chooses to specialize rather than diversify broadly. It dedicates itself to being the best refiner and fuels processor in the world, focusing on downstream operations where it can excel instead of spreading resources across exploration, production, and other sectors. This disciplined approach sets Valero apart and drives its financial success. In today's commodity markets, which can be unpredictable, Valero aims to maintain steady and reliable cash flow. This approach ensures that the company can consistently provide dividends, repurchase shares, and keep a strong balance sheet regardless of market swings. At the same time, Valero rejects the idea of growth just for the sake of growing. Every investment decision is carefully evaluated to make sure it directly increases the value for shareholders on a per-share basis. This disciplined focus on cash flow reliability and shareholder value keeps Valero aligned with long-term financial strength rather than simply expanding its size or influence. Valero's strategy is focused on what it can control rather than taking risks on unpredictable factors. Unlike major oil companies, Valero does not engage in upstream exploration, avoiding the uncertainty of drilling results, rising development costs, and political risks linked to oil reserves. Instead, Valero operates as a buyer of crude oil, capitalizing on market fluctuations instead of being exposed to them. This approach reduces risk and allows the company to generate steady profits by refining and selling the oil it purchases, rather than betting on discovering new reserves. This disciplined focus on refining rather than exploration is a key driver of Valero's consistent performance and financial strength. Valero's refineries are among the most complex in the industry, which means they can handle a wide range of feedstocks that others can't. They can process heavy and sour crude oils, which are usually more challenging and less expensive than lighter, sweeter crude. They also work with discounted feedstocks and non-standard blends, giving them a lot of flexibility in sourcing. This complexity isn't just a technical detail, it acts like a protective barrier. Experienced disruptions or price shifts, Valero can take advantage of margin opportunities that simpler refineries miss. This feedstock advantage is a key part of their strategy to focus on what they can control and generate consistent value. Valero's strategic positioning plays a key role in its ability to optimize operations and profitability. Their assets are carefully placed near major crude supply basins, which ensures access to a steady, cost-effective feedstock supply. They're also close to key demand centers, allowing quicker, lower-cost delivery to customers. Additionally, being near export infrastructure provides flexibility to take advantage of global markets and arbitrage situations, which can significantly improve margin capture. This geographic and logistical optimization helps reduce transportation costs and gives Valero the options needed to respond effectively to market shifts. It's a deliberate approach that enhances their overall competitiveness and financial performance. Valero grows its capacity only when the financial benefits are clear and strong, focusing on expansions that make economic sense. Instead of investing heavily in new greenfield projects, which can be costly and risky, Valero prefers brownfield expansions that leverage existing infrastructure. This approach helps maintain control and efficiency. The company also avoids large mergers that can distract from its core operations and lead to higher costs, allowing it to stay disciplined and focused on steady strategic growth that aligns with its long-term goals. Valero takes a practical approach to the energy transition by focusing investments where they make economic sense. Instead of making broad or politically driven commitments, the company targets renewable diesel, low carbon fuels, and improvements in process efficiency that can add to margins. This strategy is about balancing environmental progress with financial discipline, viewing energy transition efforts as opportunities to enhance returns rather than as a mission that overrides core business principles. This ensures Valero stays focused on what it can control and delivers value to shareholders while adapting to changing market demands. Valero's ability to consistently outperform comes down to operational excellence at a large scale. They manage their complex assets with top-tier reliability and maintain strong safety standards, which helps prevent costly downtime. By controlling operating costs carefully, they optimize throughput, squeezing maximum value from every asset. Rather than complexity being a risk, Valero turns it into a competitive edge through disciplined execution. This approach ensures smooth and efficient operations that support their strategic focus on what they can control, reinforcing the advantages from processing challenging feedstocks, strategic locations, and disciplined growth choices. When oil prices fall sharply, companies that rely heavily on upstream activities, like exploration and production, often face reduced profit margins and asset write-downs. By contrast, Valero usually benefits in these situations because lower oil prices reduce its feedstock costs. This creates a structural advantage where Valero can still produce strong cash flows even when other companies are struggling financially or cutting dividends. This counter-cyclical strength helps Valero maintain financial stability and supports its ability to reward shareholders consistently, regardless of the broader market conditions in the oil sector. At Valero, capital discipline isn't just a policy, it's part of the company's culture. They approach capital allocation with caution, making sure every project clears high economic hurdles before moving forward. If they find cash isn't needed for operations, it's returned quickly rather than sitting idle. They also manage debt carefully to avoid over-leveraging. This mindset helps prevent the kinds of empire-building mistakes that we often see with some larger oil supermajors, keeping Valero focused on sustainable, responsible growth instead of risky expansion for its own sake. Valero's shareholder-friendly policies are a key reason why the model works so well. The company consistently pays competitive dividends, which provide steady income for investors. Additionally, Valero executes share buybacks when conditions are favorable, helping to enhance shareholder value. They also make maintaining a strong balance sheet a priority, which supports financial stability and flexibility. This disciplined approach builds long-term trust with investors and helps reduce swings in the company's valuation making it a more reliable and attractive investment over time. Valero's financial strength comes from a disciplined focus on what it can control, setting it apart from peers. While refining margins naturally go through cycles, Valero's ability to use different feedstocks, optimize logistics, and maintain high-quality assets helps it consistently perform better than others. This strong performance translates into robust operating cash flow across those cycles, which gives Valero several advantages. It can fund its capital expenditures internally without relying on outside financing, maintain steady dividends even when market conditions soften, and reduce debt when necessary to keep the balance sheet healthy. This steady, pragmatic approach supports long-term financial resilience without unnecessary drama. Valero consistently delivers returns on invested capital that often surpass those of integrated oil majors, especially when you consider capital intensity and risk adjustments. This strong performance is supported by a disciplined approach to the balance sheet. Unlike some larger companies that carry heavy burdens from complex portfolios and legacy assets, Valero keeps a leaner, more transparent balance sheet. This clear focus helps the company maintain financial stability and agility, allowing it to navigate market cycles more effectively and sustain long-term value creation. Large integrated oil companies carry significant challenges that hold them back. A big chunk of their capital is locked into upstream projects that tend to offer low returns, which limits their flexibility. They also face political risks because they operate across many different countries, adding complexity and uncertainty. Their organizational structures are often quite complex, which slows down decision-making and reduces their ability to respond quickly to market changes. Additionally, these companies have to balance the demands of various, often conflicting stakeholders, which can dilute focus and strategic clarity. On the other hand, Valero stays focused on refining, avoiding these pitfalls by mastering its core area. This focus allows Valero to be more agile, disciplined, and effective in capital management, ultimately delivering better performance and resilience in a volatile industry. Valero's strong performance isn't about luck or risky bets, but about a careful, focused approach that stands out in an industry known for excess. By steering clear of upstream speculation and instead focusing on refining complexity and disciplined capital use, Valero has created a resilient business model that benefits from market volatility, protects investors during downturns, and delivers steady returns without unnecessary risk. Unlike large oil companies that often struggle with slow decisions and high risk due to their size and diverse operations, Valero shows that success comes from doing one thing exceptionally well rather than trying to do everything. As the oil industry faces an uncertain future, Valero's strategy demonstrates how to generate lasting value now without relying on risky bets for what's next. If you found this video useful, there's plenty of more business and finance videos on the channel that you'll enjoy watching and get great practical value from. In the meantime, thanks for watching.